Tax loss harvesting, very hot topic recently because the market has been down. What is tax loss harvesting and how can one use it effectively?
I think it's a perfect storm right now where the market's down just before the end of the tax year in the UK, where tax loss harvesting is absolutely essential just before. So I'd recommend that anyone that is in the US or US listeners to look up the term wash trading to see, one, if it's legitimate and legal, and then two, how that works and if there's any barriers. So in the UK, we have this bed and breakfasting rules, which is a 30-day window of when you can effectively buy back.
Okay, because initially I thought it all has to do the tax year end. Like I thought I could sell last day of March, buy back someday in April because it's a new year.
No, that's not quite it. So you could tax loss harvest at any point. So say in October the 1st, you dispose of your Cardano. If you were to buy it back 1st of November, that's beyond 30 days. Even though it's in the same tax year, they wouldn't be linked to each other.
And you're using this loss to offset the gains only in capital gains, or can you also claim against other types of income?
So capital losses can only be used in the same tax year that they were created or tax years going forward. You cannot carry it back and you cannot use it against income tax. You have to use it against capital gains tax. Something to note here is you only have 4 years to claim your losses.
Where does the 4-year start counting? Is that the day you bought the asset?
It's in accordance with the disposal date. It would be 4 years from the end of the tax year following the date of disposal. So if you were to dispose of something, say, on the 24th of December 2023, you have 4 years from the 5th of April 2024 to make the claim. If you create a loss in a certain tax year, you have up to 4 years to report said loss.
So that gives me a bit more wiggle room. I guess you could just look at how you're doing each year and decide what's the best year to use that.
Absolutely, yes. So between March and just before April the 5th, you want to start looking at your portfolio to see if you can, as we call it, tax loss harvest, where you purposely create said losses in order to reduce your tax liability. Absolutely.
What if that asset, for example, is delisted or the team rocked or there's no liquidity for me to sell, like an NFT?
Yes. So as mentioned, you have to make a disposal. So in this situation, you're sitting there going, I can't make the disposal. Well, you have a few options here. Number one, you could burn the asset, send it into the abyss, if you like, and that would create a loss because you've just got rid of it and you no longer have beneficial ownership. The alternative is something called a negligible value claim, an NV claim. This is where you act as if you sold the asset for zero, bought it back for zero, and you ignore the bed and breakfasting rules legally. What this effectively does is, if there's the market value of the asset is of negligible value, there's no definition of that, unfortunately, but close to zero as possible. If the asset, you bought it for 100 grand and it's now worth under £1, I would say that's of negligible value, personally. So what you do is you effectively sell it for zero, you crystallize all of those losses, you buy it back for zero, you ignore the bed and breakfasting rules, and then you're sitting on an asset worth zero. Now, it's worth noting that although you've crystallized the losses, if it were to ever go up in value, your new cost basis is zero, which means that all the tax savings you made is now being paid back and maybe some more as well. So be very careful with that. So the criteria for negligible values is, number one, it is of negligible value. There's no definition. Number two, it's unlikely to ever bounce back.
It sounds like you're basically sort of kicking the can down the road. If it ever rises in value, you still need to pay the tax. But we're doing it because we believe it's not going to go up in value.
That's exactly it. And that's why the second criteria is that it's unlikely to ever bounce back, because nobody really knows, let's be honest. I suppose the most famous case for this that isn't crypto, and this is going to show my age, is Blockbuster shares. If you bought Blockbuster shares back in the day, nobody uses it anymore. It's worth of negligible value now. You can make a claim on those shares to create a loss. But yeah, you're kicking the can down the road, maybe, if it bounces back. Now, I was about to say in the unfortunate situation where it bounces back, but that's actually a fortunate situation. So you just have to pay more taxes later on and less now.
From what you just said, it sounds quite subjective. Negligible value and unlikely to go up. Especially the second criterion. I guess you would need to gather some sort of evidence to show your conviction that it's not going to go back up. If, for example, HMRC ever questions this.
Yes, that's exactly it, Dumpling. So when you're making these claims, you want to gather as much evidence as possible in the case that HMRC were to question it. This is a bit complicated because how do you prove a negative? How do you prove that something doesn't exist? Now, contract addresses showing no activity from a certain point onwards helps. Maybe a screenshot of some form of marketplace where you can buy said assets showing, an inactivity and the floor price being of negligible value, for example. But there are many ways to go about it. It really does depend on the asset because I could give you 100 different ways of doing it. It's just whatever's appropriate for the asset. But yes, take receipts, screenshots, the whole lot, and keep them safe.
For the Cardano viewers out there, there are a few rug pulls in the community, and if I were to claim negligible value on these, I would screenshot, for example, their Discord server, their announcements.
Yeah, and I think it's important to note the difference between rug pulls and winding down operations, because a rug pull has a negative connotation on a situation where there's a purpose act of crime within the sort of leadership of a particular project, whereas winding down and a failed business is something slightly different. But both, your asset would be deemed of negligible value, and if it is unlikely to ever bounce back, then yeah, there should be some claims for relief somewhere around that you could make.